Hello, everybody. This is Brian Terry with the Conservative Covered Call Trading Group, and I wanted to share a few trades that I closed out this week. The first one was a trade I did in AA Alcoa, and here is the copy of the actual alert that we sent out to our members. And this, as you can see, it was dated February 1st. So we did a in-the-money covered call. We bought the stock at $57.38 per share. And then I turned around and sold a February 11th 55 call and collected $3.63 credit. So that was a 2.33% return on capital in 10 days. And this trade gave us 6 1/3% of downside protection. So annualized over those 10 days, it would be a 77% annualized return. And the stock break even was 53.75, meaning that the stock could have dropped all the way down to 53.75 before this trade ended up losing money. And here's just a quick snapshot of the chart. And I drew this horizontal line. That was the 55 level. And so on February 3rd, it was right about 57, and you can see the stock took off after that. And in fact, so for this trade to be profitable, all it really required was for the stock to stay above 55. It didn't have to go up. It could have just trotted sideways. And this was actually a little bit unusual. I was actually assigned away on the 9th, on Wednesday. So I actually was out of the trade in 8 days. So we made 2.33% in 8 days, and we were able to redeploy our capital pretty much as soon as Wednesday morning. I also did 4 other in-the-money cover calls that expired Friday: BMY, XLE, Wells Fargo, and ADM. So, and they all, like I said, they all expired out of the money, or in the money, I'm sorry, and were assigned away. So here's the actual alerts that I did. So this was BMY. The stock was at 64.74. We made a 0.69. It was an 18% annualized, not super great, but again, the stock finished the week at 66.88, so we made a full profit on that trade. The XLE, we bought the shares at 68.88. We sold the 211.66 call. We made 0.69% in 7 days, which was a 36% annualized return. The break even was 65. And the exit level was 63. So if the stock had actually, or ETF had dropped below 63, I would have exited the trade according to my rules. And it ended up the week at 70.41. So that one was a nice quiet trade. And then the last one that I closed out Friday was Wells Fargo. Bought it at 55.77, and this was on February 3rd. Sold the 211.54 call, made a 0.78% in 8 days, had almost 4% of downside protection, 32% annualized, and a break even of 53.58, and it finished actually at 58.31 on Friday afternoon. So all 4 of those just kind of expired. The shares will get assigned away over the weekend, and I'll have the capital to redeploy on Monday. And so this is ADM. We bought the stock at 75.79, sold the 74 call. It was a 0.39% return. But this one actually also paid a dividend. So we were able to collect the dividend and the credit for the shares. So it was about a 1% return in 10 days, including the dividend, 34% annualized, and the stock finished at 76.46. So that was the other trade. So in terms of takeaways, I'm a big believer in the money covered calls. I think they work pretty well in these kind of turbulent markets. The increased IV gives us additional credit and the ability to go even further outside, give us further downside protection. And what I've kind of come to learn over by doing this strategy is the key is finding, really quality stocks or ETF with low beta, particularly if they pay a dividend. And you want to focus on the sectors that are in favor. Right now, obviously, that's energy, some financials. And then I think another really key thing is focusing on your stop loss rules. So if the stock moves against you, you have to have kind of a line in the sand where you're going to get out of the trade and kind of take the loss and redeploy your capital. So I hope this has been helpful. I put a list of our link to our group, conservativecoveredcalls.com. If you have any questions or feedback, I'd love to hear from you. And again, thanks for listening. And I'm going to go ahead and stop the recording now, but I'll go ahead and post this. And again, if you guys have any questions, I'd love to hear from you and get some feedback from you as well. Thanks a bunch.